welcome to The Explainer. Today, we're diving into an absolute clash of the titans, Bitcoin versus gold. We're going to break down a really high-stakes debate between two financial giants, and we'll use their own words to explore what true conviction really looks like.
So, who are our contenders? In one corner, you've got Michael Saylor, a guy who has famously bet his entire company's future on Bitcoin. And in the other corner, you have Frank Giustra, a billionaire financier who literally built his fortune on gold. We're talking two titans with two totally different visions for the future of money.
And look, this isn't just some theoretical classroom debate. We're getting right to the heart of it. Who actually has more skin in the game? Is it the gold bugs, or is it the Bitcoin maximalists, the people who believe Bitcoin is the only game in town for the future? It's a real battle of conviction, and as you're about to see, the numbers tell a pretty wild story.
All right, so to really get into this, we have to start with the psychology of the investors themselves. According to Saylor, if you want to understand this debate, you first have to realize you're dealing with two completely different species of investor.
So, here's how Saylor paints the picture. The gold investor, they're playing by the old rules. They're cautious, they're traditional, and they generally trust the system. They're investing in the security of the past. But the Bitcoiner, oh, they're a whole different breed. They're zealous believers, betting big on a future where technology just completely flips the entire financial world on its head. Okay, so that's the psychology. But talk is cheap, right? How does this difference in mindset actually show up when people invest their hard-earned money? This is where Saylor throws his first major punch, and it's a big one. He questions the very definition of conviction. Saylor just cuts right to it with this simple but honestly kind of brutal question. He points out that even the loudest gold advocates typically only recommend putting a tiny fraction of your portfolio into it. Is that really conviction, or is it just a timid little hedge against uncertainty? I mean, you've heard this advice a million times, right? Treat gold like a small insurance policy in a bigger, diversified portfolio. But for Saylor, that's not belief. That's a lack of it. It's playing it safe, not truly going all in on the thing you claim is the best store of value on Earth. And then he drops the bombshell. He brings up data showing that over half of Bitcoin investors have more than 50% of their entire net worth in that one single asset. That's not a hedge, folks. That is a full-blown, all-in bet on the future. And if you thought that was intense, hold on. Saylor's data also suggests that a staggering 84% of Bitcoiners will be willing to mortgage their actual homes to buy more. I mean, we're not just talking about conviction at this point. We're talking about a level of belief that is almost religious. Okay, but Giustra isn't just going to sit there and take that. He hears all this, and he completely flips the script. He argues this isn't about conviction at all. It's about something much more basic. It's just smart risk management. Giustra's comeback is simple but powerful. For thousands of years, gold has been the ultimate insurance policy, the safe harbor in a storm. To him, putting all your eggs into the super volatile basket of Bitcoin isn't just risky. It's a one-way ticket to going broke. It ignores centuries of proven investment wisdom. And this leads us right into Giustra's biggest fear about Bitcoin, the very real potential for market manipulation. He's not just worried about the volatility. He's worried about who might be pulling the strings behind the scenes. And that brings up the idea of whales. You've probably heard this term. We're talking about massive players in the crypto ocean who hold so much Bitcoin they can create huge waves with a single trade. In a market that's still largely unregulated, these whales could have the power to move prices whenever they want, leaving all the smaller investors in their wake. And then he drops this absolutely jaw-dropping statistic. Just 2% of accounts control 95% of the entire Bitcoin market. For Giustra, that doesn't sound like a decentralized revolution. That sounds like a classic pump and dump scheme just waiting to happen, where a few insiders are holding all the cards. But Saylor fires right back. He claims this criticism, as common as it is based on a complete and fundamental misunderstanding of how the technology actually works. He argues people are reading the data all wrong. So, Saylor's explanation is a real game changer here. He says these so-called whale wallets aren't single billionaires. They're actually the custodial accounts of the major crypto exchanges, like Binance or Coinbase. One of those wallets isn't one person. It's holding the Bitcoin of millions of individual customers. For example, Binance's wallet holds the funds for over 56 million separate accounts. So the concentration is for security and custody, not manipulation.
So where does all this leave us? Well, it means this fight isn't really just about gold versus Bitcoin. It's about two fundamentally different ways of seeing the world and the entire future of finance.
On one hand, you have Saylor's vision of a technological revolution, a brand new economic order that empowers every single individual. And on the other hand, you have Giustra's stark warning of an unregulated casino, a fairy tale, as he puts it, that is just destined to end in tears.
And so we're left with a pretty fundamental choice, aren't we? Are you building a fortress to protect what you already have, or are you building a rocket ship to a new financial frontier? One asset is designed to be a shield, the other is a massive bet on the future. The real question is, which path do you choose?